Good afternoon, everyone. It is James O'Reilly from Northeast here to talk to you about some of the key things financially that may come out of the election, whether it is to be the coalition that are elected or the Labor Party. I've had a lot of people recently ask me what I believe the impact is going to be for them based on some pretty significant differentials in terms of policies from both parties. And so the purpose of today is to help you get a better sense for the likely impact of either party being elected. It may potentially impact your vote or just give you a better sense for what to anticipate. Now, just before we jump in, I'm mindful that there's a huge amount to talk about here. It's very, very difficult to compress this into a very small video. And as such, if you go to the comments just below, you can actually click the link to jump into any particular category or jump into the right time for any particular category that we are discussing. Today, we're going to be covering low, middle, high income earners. We're going to be covering parents, small businesses, first home buyers and older Australians. I know that not all of those are going to be applicable to you, so feel free to go straight to the comments now and actually find the things that are going to be most important for you to understand. Click on those and it will take you straight through. If we jump into this, or rather just before we jump into this, there is going to be one little bit of housekeeping that we have here. I'm going to move myself down. And that is that, of course, this is all general advice, unable to give you specific advice without taking into account your needs and your circumstances. If you would like specific advice, please get in touch with a financial planner. It also doesn't consider political views. It doesn't consider electorate-specific promises. Just simply too difficult to do that on a video like this. I'd be here for 9 hours. The video assumes that either party will make good on their promises, which is an amusingly large asterisk. And also it flags that we're not done yet. And what I mean by that is that today is Monday in the final week of the run-up to the election. And there are more promises to come from both parties. So there might be a little bit of improvement as things continue over the next week, but just FYI, in terms of where we're up to for the video, there may be a few policies that don't get included here simply based on the timing. Now, with that in mind, let's jump straight into this. The very first topic here is around low-income earners. So from Liberals' perspective, Liberal have proposed to increase the tax offset for low-income earners. The lower middle income tax offset will start at $255 for people earning under 37 grand. It will increase continuously thereafter. From a Labor government's perspective, they've actually increased this amount. So there's certainly a tick on that side. In addition to this, Labor have committed to a review of Newstart. They've said in their own papers that they believe that this amount is too low, the Newstart benefit. A lot of low-income earners are recipients of Newstart, and to that end, the fact that there appears to be some commitment to review that is another tick on their side. So on the balance, if you find yourself in this low-income earner space, probably likely that Labor policies may perhaps be more suitable for you in terms of your hip pocket. Moving across to middle-income earners, $50,000 to $90,000 is the range we've got here. So from a Liberal perspective or a coalition perspective, doubling the low and middle income tax offset from $530 up to $1,080 for those with incomes up to 90 grand. It then tapers down so you actually get a benefit all the way to 120K. They're also looking to increase the 32.5% tax bracket from $87,000 up to $90,000. I'm going to see if I can minimize myself. There we go. That's going to do a much better task of this. So firstly, 32.5% bracket from 87 up to 90,000 means that if you're at the absolute upper limit of this middle income, then you will get a further tax benefit. But as it says over here, that Labor is actually committed to matching both of those proposals. From a coalition perspective, there is also a proposal, albeit a fair way away, to reduce the 32.5% tax bracket down to 30%, which would impact a huge amount of Australians and certainly everyone in this middle income space. From Labor's perspective, they've openly said that they are going to repeal that policy. There's a few other things on the periphery here with Labor. One of them is that they intend to halve capital gains discounts from 50% down to 25%. That's going to have a big impact for a lot of middle income earners. Plenty of middle income earners are investors themselves, and halving the capital gains discount, i.e. the tax that you will pay on an investment gain if you hold it for more than 12 months, if that discount is halved, that means that investors are going to pay more tax on the earnings that they receive from their investments. And as such, I think that's a blight for middle income earners, a lot of them investors. The same thing applying to negative gearing. I think there's perhaps a misapprehension, an intentionally directed misapprehension that the people that take advantage of negative gearing are all high income earners, or as Bill Shelton would say, the top end of town. The statistics don't really reflect that. There are plenty of middle income earners and middle income earning families that do utilize negative gearing. So abolishing that in the future, I think, results in, on a comparative basis, Liberal getting the tick here, although not by much for this particular tier. Moving across to high income earners, this one becomes a lot easier. From Liberals' perspective, their proposal is to abolish the 37% tax threshold, albeit in 2023-24, so quite a distance away. There's also the proposal to further increase the 32.5% tax bracket up to 120 grand, which would save you 4.5% tax on up to $30,000 here, a significant change. Labor has gone the exact opposite way. Firstly, they've declared they're going to repeal these policies. Secondly, they've sought to double superannuation tax for individuals with incomes above 200K. So previously, incomes between or below $250,000, the contribution that you made into superannuation was taxed at 15%. Labor's aspiration here is to double that to 30%, which would ultimately mean that for every dollar you contribute to super, less of it is actually going to super and more of it is going to tax if you find yourself in that category. Doubling tax on distributions from discretionary trusts is going to be a big negative for high income earners, particularly those, of course, that use a discretionary trust. And a lot of high income earners do that. So doubling the tax distributions from 15% up to 30% is going to have a significant impact for a lot of people. And it might also call to question whether the use of discretionary trusts is valuable depending on your financial situation. And lastly, there is the reintroduction of what's called the deficit reduction levy, which is bluntly just a tax slug. If you're earning enough income to be in the highest marginal tax rate, over $180,000, Labor's proposal is that there will be an extra 2%. You are considered to be in the top end of town, and therefore you're going to be levied 2%, which will be distributed toward deficit reduction as well as toward their other policies, and many of them supporting lower income earners, as we talked about a little bit earlier. For parents, I'm thinking I might have to shuffle myself around a little bit as I go through this. But for parents, on a comparative basis, I think this is one that Labor wins easily. Liberal have put forward they want to maintain access to 15 hours of subsidised preschool for 4-year-old children, propose better flexibility around the paid parental leave scheme. Instead of getting your 18 weeks all at once of paid parental leave, they're proposing that you can stretch it out over the full 2 years immediately afterward, which should offer more flexibility. And lastly, there's some subsidised energy bills, albeit very, very marginally. Labor have really come out swinging here. Childcare they've declared that to be free for individual or for families earning less than $70,000. And on a comparative basis, if you're earning under $174,000, it will still be cheaper to fund childcare under a Labor government based on their modelling. They're expanding the coalition scheme to not just cater for 4-year-olds, but also cater for 3-year-olds, which will provide relief for a lot of individuals that do have a 3-year-old child and perhaps still sending them to daycare or childcare and paying those higher rates. There's a proposal for superannuation to be paid on the paid parental leave, which ensures, of course, if you're on maternity leave, that your super can keep ticking over, which I think is a great policy. And then lastly, there's a boost for small businesses who want to hire employees who are carers or parents trying to return to the workforce. So this is going to make it more attractive for small businesses to hire parents that are returning to the workforce, which, of course, is a great thing for people in that category. So comparatively, definitely, I think Labor get the tick, and rightfully so, in this category. Small businesses, firstly, from the coalition perspective, a further reduction from 27.5% tax down to 25% for small business. An instant asset write-off increased from $25,000 to $30,000. Of course, they announced that in the budget, and as it says on the Labor side here, they've actually committed to supporting both of these proposals. So not much of a difference so far. The Liberal government have announced an Australian Business Growth Fund, which is designed to help small businesses to get easier access to funding to grow their businesses, as well as lower cost access to funding. So that seems like a really reasonable and suitable proposal to promote small business. From Labor's perspective, there haven't been a lot of, in fact, there have been very few policies that are really going to help small business. The 20% upfront deductibility for small businesses purchases, that's a benefit. It's very similar to the instant asset write-off, but it's just for when there's an asset that's much higher than $20,000. Beneficial, definitely, but I don't think it has a huge amount of significance in this election. There are some things that Labor are doing, though, that I believe are going to have potentially a very detrimental effect for small business. The first one is the doubling of discretionary tax. There are many Australian business owners that hold their businesses inside trusts. And the reason that you can do that, or you may do that, is not just for the tax benefits that may exist. From an asset protection perspective, owning a business in a trust can be very intelligent. From a continuation plan, a succession plan as to what happens with your business and who takes it over next, owning in a trust again can be a very intelligent play. Doubling the discretionary tax to 30% means that if you have a business that's currently held inside a discretionary trust, then you ultimately might find yourself still paying the same 30% tax that big businesses are paying and not really benefiting at all from that tax reduction that's been outlined. So again, that's a concern and perhaps an element of the policy that's potentially been poorly thought out. Also, the franking credit changes are definitely going to impact a lot of small businesses if those businesses are incorporated. So again, if you own a small business and that business is a company or you run a company, or alternatively, if you're thinking about doing that, and again, there's a lot of reasons to do that, not just tax. From an asset protection perspective, from a succession planning perspective, running a business through a company can be a very, very smart thing to do. But the challenge is that with the franking credit changes that Labor have proposed, if you can't get your hands on the tax the company has paid already, well, that may potentially create a really poor scenario for you. So to use a really simple example, if you own your own business that is incorporated, it's a company, and it makes $50,000. In the past, the company would pay the tax on $50,000, which would be about $15,000 for simple numbers. And then you would take income of $35,000. Now, you'd pay your own income tax on the remaining $35,000, but you could claw back that $15,000 that had been paid by the company to be included in your marginal tax rate. So you end up just earning your $50,000. And I think that setup is actually quite fair. Now, under this new proposal, if Labor are to be elected, you won't be able to claw back that $15,000. So that's going to create a big problem for small businesses that are incorporated. It's certainly going to result in the need to have much better tax planning. And unfortunately, that doesn't flow very well into another one of Labor's policies, which is to cap accountancy fees for individuals at $3,000. Now, for the most part, that an individual accountancy fee of $3,000 is not an unreasonable amount. But all of these things in conjunction certainly make me personally feel like small businesses likely to be in better hands under a coalition government on a two-party preferred basis. Moving on. First home buyers, from a coalition perspective, they wish to maintain the First Home Super Saver scheme. This is an obvious difference because Labor, at the other hand, are seeking to close it. My personal view on this scheme is that it's been a really valuable one. I have clients that have utilised it and utilised it well. Having said that, one of the problems with this scheme is that the uptake has been very low, and part of that is because it is complicated. In a lot of cases, it does require the use of or the utility of a financial professional to help you with that scheme in order to get the best out of it and not screw it up, because the consequences of screwing it up are pretty enormous. So in that sense, even though it's a good initiative, it's a tough one to really make a big call on. The coalition, in addition, has proposed establishing a first home deposit scheme to help first home buyers. This is a good policy, in my personal opinion. And what this policy is going to allow is that if you're an individual with an income of under $125,000 or couple under $200,000 and you're buying your first home, it's going to circumvent the need to take out lenders' mortgage insurance. Now, if you have a deposit of, for instance, 5% or 10%, general consensus is you should save up to 20% in order to buy your first home so you don't have to pay lenders' mortgage insurance, because it's incredibly costly and you as the purchaser actually get nothing for it. So you're sort of throwing the money away in that sense. The federal government has said that if they are elected, they're actually going to seek to put forward a proposal whereby a first home buyer, they will stump up the gap between your 5% deposit and your 20% deposit so that you don't have to pay lenders' mortgage insurance and it is more affordable for you to get into the property market. Again, for me, I think this is a suitable proposal based on the circumstances. I'm interested to see how it plays out and what restrictions are around it. But for the most part, I rubber stamp this one. I think it's a good one. At Labor's end, they're closing the First Home Super Saver scheme, as we discussed. They immediately announced that they would also match the Coalition's First Home Loan Deposit scheme, as I've just outlined. Then lastly, they've suggested, or they've said already, that they are going to seek to remove negative gearing and halve the capital gains discounts for investments, which we talked about a little bit earlier. Now, those measures, they've openly said those measures are designed to curb investment lending, and ultimately that puts downward pressure on house prices and it stops them from spiraling out of control. I'm very concerned about these two policies in conjunction. I think in conjunction, matching the first home deposit scheme and also seeking to put downward pressure on home prices is a very, very dangerous bipartisan strategy. And the reason that I think it is because the risk with a first home buyer's deposit, or the first home loan deposit scheme, regardless of who is elected, is you're actively encouraging young investors to make significant investments with very little equity. So it's allowing people to leverage a lot more. You might have a 5% deposit, say $25,000, and that allows you to buy your $500,000 home. Great home. But if the property market continues to fall as it has already, and it falls by 5%, you now have no equity in the property. And if it falls by 10%, you're now underwater, you're negative. And if you were to sell the home, you're $25,000 in debt on the basis of the way the property market has fallen there. And that's a very, very concerning outcome. Now, I think if you are seeking to use this in isolation and creating the conditions where the property market is supported, I'm a lot less concerned than if you're still implementing measures that are actually going to drive the property market property prices down, or at least subdue them, while still encouraging that first home buyers purchase with 5% or 10% equity. I think that's a very dangerous play. And as such, without a doubt, in my mind, the tick has to go to the Coalition in this space. Lastly, older Australians. So the Liberal government here, or the Coalition, has announced that, of course, they have their pension loan scheme already, and that allows older Australians to essentially access the value of their property and to sort of set up what's called a reverse mortgage. And that allows them to access the value of their property to use that money, then pay for living expenses so that they don't need to sell their home. They've already proposed that. Or it's already running in reality. We've got subsidised energy bills, as well as the goal of reaching 475,000 aged care workers by 2025. That's a good goal, in my opinion. I think it dovetails really nicely into the Royal Commission on Aged Care that's currently running. However, in saying that, the Labor government's proposals are much, much stronger here, in my opinion. Firstly, the pension and dental scheme. This is going to allow any Commonwealth Seniors healthcare card holder or age pension recipient to access up to $1,000 of dental care every 2 years. I think it's a great initiative. I was reading yesterday the stats around pensioners accessing dental care, and it certainly looks like a lot of them find it difficult to afford dental care. So this seems like a really suitable scheme. The hospital funding boost and the cancer plan that Labor have are very significant, and they are really, in reality, they're going to benefit older Australians perhaps more than any other group. So I think that's a significant tick for them on that side. We talked before about the 30% tax break for small businesses if you want to employ someone who is a carer or returning to the workforce from parental leave. The same tax break will also be available for employees younger than 25 or older than 55. And this is going to be great for a lot of older Australians who still want to continue to be in the workforce. Unfortunately, we've seen numerous times the statistics that show that older Australians find it hard to get jobs. And so if this can help employers to consider them and feel like it's going to be more suitable to hire older Australians and potentially pay them the wage that they deserve based on their experience and expertise, I think that's a great policy. The last thing here is around the abolition of franking credits. Labor have said, of course, as we talked about, that they want to get rid of franking credits altogether. They consider it to be a gift. And the rhetoric from the Coalition has been that this is going to be a retiree tax. Their stats indicate that about 840,000 self-funded retirees are going to be impacted. I've taken the opportunity to look at this. My personal view is it's not as big a deal as perhaps it's laid out to be. I know that I'm going to have some clients that are a little bit upset about me saying this, but I think for the majority of Australians, this policy is pretty well directed. Most self-funded retirees are not really going to see a significant change in their wealth or their incomes based on this policy. There are certainly some that will experience very high changes, but those probably have, in most cases, will have high wealth that is commensurate to the franking credits that they are receiving. So this has really been pointed by the Coalition as being a policy that this is why you shouldn't vote for the Labor government if you are an older Australian. My personal view is that I think it's probably not as severe in most cases as it's being put forward. So there you have it, guys. That is my rundown as to the impacts if we are to see a coalition government or a Labor government, the impacts for you. Now, as I mentioned at the beginning, this is, of course, general advice. It has to be because I'm not across your own personal situation. If, however, you would like to have a discussion about your own personal situation and how this might impact you in more detail, you're more than welcome to get in touch. You can do that via email or the email address below. Or alternatively, if you would like to have a chat over the phone, you can put this link into your browser, calendly.com, James O'Reilly, book a phone call, and then that will allow you, whether it's on your phone or on your computer, that will allow you to book in a 15-minute phone call with me. I'll give you a call at whatever time you select, and we can have a chat then. Thank you very much for watching this. I hope it added a lot of value for you, and I look forward to hearing from you all soon. Bye, everyone.